Have you ever seen a stock just completely rewrite its own story in a single day? I'm not talking about a gradual climb. I mean a violent, explosive transformation that makes all the old charts and assumptions totally worthless. Well, today, we're going to dissect one of those rare events. We are diving deep into the technical anatomy of GLTO's monumental price explosion.
So to really get the scale of the earthquake, you've got to see the quiet ground before it hit. And this was GLTO. Before all the chaos, it closed at a sleepy $3.79. Just another stock, trading in relative obscurity, with absolutely nothing on the charts screaming about what was about to happen.
And then, this. The very next day, the stock didn't just climb, it detonated. It hit an absolutely astonishing high of $31.70. I mean, that is an over 700% move from the day before. This isn't just a rally, people. This is a paradigm shift. It's a complete reset of everything the market thought it knew. So the big question is, what in the world does the technical footprint of an explosion like this even look like?
Okay, so here's our game plan to get to the bottom of this. First, we're going to define what this paradigm-shifting event really is. Then we'll decode the technical footprint it left all over the charts. After that, we are mapping out the brand new trading battlefield, the key levels you have to watch. And finally, we'll walk through 3 possible scenarios for what could happen next.
Right, let's start with the day itself. Look, this wasn't just a good day for GLTO, it was the day the stock was fundamentally reborn. All the old analysis, every previous trend, it was all rendered completely irrelevant in just a matter of hours.
What we're looking at here is a textbook, and I mean textbook breakaway gap. This isn't just a little hop at the open. No, it's a massive leap in price that happens on enormous volume. You can think of it like a declaration of war on the old trend. It's the market screaming that the fundamental perception of this stock has changed, and a powerful new trend has just kicked off.
And when we say high volume, we really mean it. Just look at this. On one side, you have the average daily volume. It's that tiny little sliver. And on the other, you have the volume from October 7th, over 77 million shares. This is so important. A number this big, thousands of times the average, tells you this isn't just a bunch of retail excitement. It screams that the big players, the institutions, are now in the game. This massive participation is what gives a breakaway gap its power and its legitimacy.
Now let's look at the story of the day, told by the price itself. It gapped way up to open near 25 bucks, then it just rocketed to a high of almost 32. But notice that close. It came all the way back down to 17.92. This shows a real battle was fought. The high? That was peak euphoria. But the close, way off that high, tells us some of the early money decided to cash in and take profits. Still, closing so far above the previous day makes this an overwhelmingly powerful bullish signal, even with that late-day sell-off.
Okay, so the old map is useless. How do we even begin to navigate this new territory? Let's move to our second section and start decoding that technical footprint. We need to read the charts to understand the new forces at play here.
What's really fascinating here is how this visualizes the idea of being overextended. The current price is just floating in space, completely detached from all its historical anchors. Just look at the moving averages. The 5-day, 10-day, 20-day, even the long-term 200-day. They are all huddled way down below $7. This means there are no traditional support levels up here. The price is like a rocket that has left its launch pad far, far behind.
And this brings us to the central conflict in the whole analysis. On the left, you've got momentum indicators that are just screaming, go! The MACD, the ADX, the Arun, they all confirm a powerful, high-conviction trend is underway. But on the right, the oscillators are flashing these severe warnings. An RSI above 70 is considered overbought. Above 90, like we're seeing here, is incredibly rare and signals extreme euphoria that often comes right before a sharp pullback. Same story for the money flow index at nearly 100. So what you have is an unstoppable force of momentum meeting the immovable object of an extremely overbought condition.
And if you need just one number to confirm that this is a whole new ballgame, here it is. The price has deviated from its old pre-event trendline by over 323%. Statistically, that is a complete failure of the old model. This perfectly illustrates the idea of a regime change. The stock is playing by a completely new set of rules now, and it's invalidating any trading algorithms that were relying on its past behavior. So, given this new reality, how does a trader even approach this thing? Let's move on to our third section and map out this new trading battlefield. This is all about identifying the key levels and understanding the insane volatility we should probably expect.
The old support and resistance levels, they're gone. Forget them. Here are the new lines in the sand that matter. The critical resistance, the absolute ceiling, is the day's high, $31.70. Bulls have to break this to prove the rally has more gas in the tank. The primary support, or the floor, is the day's low, $16.40. And below that, you have that huge empty space on the chart, the gap zone. You know, traders often say gaps get filled, which means that area could act like a magnet if the price starts to fall.
So, what happens at the next opening bell? Well, it's going to be a showdown. On one side, you have the profit takers, sitting on massive gains and looking for the exit. On the other side, you have an army of new buyers driven by the fear of missing out, FOMO, who just want in at any price. This clash of forces makes one thing virtually guaranteed: a wildly volatile open.
We can try to put some numbers on that volatility. Using a tool called the average true range, or ATR, we can project a probable trading range. Based on the close, it suggests a range between, say, 1550 and 2030. But let's be crystal clear here. ATR is based on past data. In a supercharged environment like this, it's just a rough guide. The actual range could easily blow right past these numbers.
And that brings us to our final section. We've analyzed the event, we've mapped the battlefield. Now, let's pull it all together into the potential paths this stock could take. We're going to look at 3 scenarios and 1 overriding conclusion.
First up, the bullish scenario. This is where momentum just keeps on winning. The story or the catalyst behind this whole move is so powerful that it continues to attract a flood of new buyers. The stock might chop around for a bit before pushing right through that key resistance at $31.70 and heading into even higher, uncharted territory.
Then, of course, you have the bearish scenario. This is where those extreme overbought indicators finally matter. Gravity takes over. Early buyers turn into mass sellers to lock in their huge gains, and this selling triggers a cascade. The price could then fall, and fall fast, to test those new support levels, like the day's low of 1640, or maybe even dip into that gap zone below.
And finally, the third and honestly a very common possibility: volatile consolidation. The stock doesn't rocket higher, but it doesn't collapse either. Instead, it gets stuck in this wide, choppy trading range between those key support and resistance levels. Think of it as a period of digestion, where the market just tries to figure out what the new normal price for GLTO is and lets those screaming hot indicators cool off before the next big move.
So what's the bottom line here? This quote from the analysis just sums it up perfectly. The momentum is undeniable, it's bullish, but the stock is also walking a tightrope. It is, quote, critically overbought and exceptionally volatile. And that carries a very real, very immediate risk of a sudden and steep fall. The potential for reward is huge, but the potential for risk is every bit as massive.
Which leaves us with this final question for you to think about. We've broken down the anatomy of this explosion: the gap, the volume, the conflicting signals, the potential paths forward. But when a stock's entire past becomes irrelevant overnight, the decision to act comes down to more than just the charts. What does your own strategy, your own risk tolerance, what does it tell you to do next? That really is the ultimate question on this new battlefield.